Welcome back. I'm Pratap here. Today is the 7th August 2024. In this video, let us evaluate the performance of high liquidity zones generated in our previous report. So before that, an announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So from our YouTube channel homepage, you click on this community tab, you will get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. I'm clicking on the link. Now we are into the playlist supply demand zone price action course. So far 62 video lessons are available to you. So total number of lessons are 24. So you can scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. So from this video description, please join in the Telegram channel. It will be helpful to you. Each time when we release a new video or any other important update, we'll provide at the Telegram channel. Now let's get into the analysis of the high liquidity zones generated by the NeoStock software in our yesterday after end of the market hours. So from our software generated list, we have identified 3 high liquidity zones: Hindustan Copper, Bharti Airtel and TVS Motors. And first let us look into the Bharti Airtel. You have a lot of learning from this particular chart. Recently you might have learned the new strategy we developed, because nobody knows this strategy in the market by any supply demand zone traders. This is the one I have developed recently, a powerful strategy. And we call this strategy as a lower time frame zone, which is the origin for the creation of the higher time frame zone. And also we observed such kind of lower time frame zones are having a very strong institutional order flow. That is what I explained in lesson 22. In lesson 22 you have learned this new strategy, lower time frame zone as an origin to the higher time frame. This is the name of the strategy. And Bharti Airtel exactly having built this zone is built based on that strategy. And this is a 75 minutes high liquidity zone. We have a we have a drop candle. We have 5 base candles, 1, 2, 3, 4, 5 base candles, and again a rally candle. So with a pro gap. So this is the 75 minute zone. So as per our high liquidity zone strategy, you have to fine tune this zone with 15 minutes time frame. The one time frame below 15 minutes. So 15 minutes time frame. Here we have identified a 15 minute zone. We have a drop base, 3 base candles and a rally. This is a 15 minute zone. And this 15 minute zone is become an origin to this 75 minutes high liquidity zone. And this 15 minutes is having a strong order flow, but we need to fine tune this 15 minutes with 5 minutes time frame to manage the risk. So what I did, I went to the 5 minutes time frame. So within this 5 minutes time frame, we have drawn the 5 minute zone. So you have a rally candle as a leg-in. You have 1, 2, 3, 4 base candles, and again a rally candle. Even this 5 minute zone is the origin for the creation of this entire 75 minute zone. That means 75 minute zone picked up the orders from this 5 minute zone. Of course, this 5 minute zone is the fine tuned zone of the 15 minute zone. But this is the area where we have a very strong institutional order flow. So from here it picked up the orders. And such kind of zones will support multitasking. They work for multiple times. See, already tested once at the time of picking the orders from this zone during the zone creation. This is the first test. Again second time, when prices entered into this 75 minutes high liquidity zone, prices went up to this 15 minute zone and near to this fine tuned 5 minute zone. And then see the move, it's a very good move. And yesterday also prices came very close to this zone. They came very close. This is the 15 minute zone. Inside you have a fine tuned, very close. They came very close. And again they move. And again today once again prices came very close. A little below yesterday's low. This is yesterday's low, Tuesday. This is Wednesday, today's low. They came very close. And then reached the target, 15 minutes target. Let me go to the 15 minutes time frame. See here, you have a rally base drop. The 15 minutes target it reached today. And when it came very close to the zone, at 12 o'clock it came. And when it reached the target at 13:15, within 1 hour 15 minutes, the trade is completed. But is it exactly reached into this 15 minutes area or 5 minutes, fine tuned 5 minutes area? No, a little above. Maybe if you would have added entry buffer, your trade would have been executed and it reached the target. This is the impression we are getting, right? With entry buffer. Generally we add entry buffer a maximum of 0.1%. But what happened? Even after adding the entry buffer, with the 80 paisa difference, the trade is missed out. The entry buffer is not good enough to get the trade. Still, it is a lack of reaching another 80 paisa. So that means narrowly we miss the trade. But those who would have added additional buffer, maybe it would have got the trade. But generally, as per my experience, what I explain you in our training courses, the maximum allowed buffer is 0.1%. There is no hard rule, but that is itself is a good buffer. But beyond that we can't accept. If we accept, it may impact the risk management. But some people, experienced people, what they do, they see the previous price action. See from where, see here, from this area, let me draw a horizontal line. This is, see here, all you people are learning at present, but experienced people point of view, I am telling, they always see the price action. That's why price action is very, very important. See, prices reached, actually see here, let me draw one more line. First prices reached to this location. There is a rejection from here. Again, once again picked up the orders. That means on this particular time, supply is very strong. See here, prices were coming down. Supply is very strong. But here, it got the impact, first impact. There is a small rejection. And again came. Here another big rejection. From here again, prices were started moving up. If you go to the 5 minutes time frame, this is what happened. And then prices were started moving up. That means in this area there is a very strong order flow is there. In this area means from here below, probably up to this fine-tuned 5 minutes area, there will be a very strong order flow. This is the way you need to assume. That means institutions might have added new order flows within this area. Why? Because this is the area. We already identified a institutional strong order flow because the lower time frame is the origin for the creation of the higher time frame. Probably this lower time frame area is your institutional favorite area. That's why these zones works very strong. Those zones not only helped in creating higher time frame zones, but also a strong order flows will be there that will give you good trade opportunities. This is the point you have to observe. So what experienced people will do? Next time again prices are entering, the blue color area, the one below. First, let me delete the above one. See here, this is yesterday's low. When prices reach near to this area, they will keep a trade. They will place an order. They need not go up to fine-tuned 5 minutes area. This is the reference they take. Either they keep at the low of the previous, or a little below, or a little above they keep. Why little below? Because they have understanding that already it consumed the orders up to this blue color line. And below, next time prices go a little below, it pick up the orders and again it will push the prices up. Sometimes what happens, institutions may add again a new order flow. At the time, prices may not reach up to this blue color area. Probably a little above the blue color area, prices will start moving. This is the way people having different understandings. If the supply is very strong, it consumes all these orders. By the time supply is weakened, and the real institutional pending order in this area again push. That is what happened in today's scenario. It reached up to the blue color area. By the time the supply is exhausted almost, it came a little below. Some more existing demand has been consumed. After that, the supply is completely exhausted, no more supply. And now the demand, because here we have a strong institutional order flow, it pushed the prices up to its next 15 minutes target zone, because it is a high liquidity zone, the 75 minutes area. That is what we have. That way they keep the order. But what is your entry? Entry is this blue color. That means this entire area is your buffer, entry buffer. It might be beyond your expected limit. What is expected limit? 0.1%. What you land. That is theory. But this is practical. Understanding the price action. Based on the price action, we are defining the buffer. This is the point you have to understand. It's not easy for the beginning level to understand these concepts. Once your experience grows, you will be able to understand the behavior of the price action. This is a purely based on the price action, we are defining the order. But what is our stop loss? Our stop loss is with this 5 minutes. Because this is the fine-tuned 5 minutes area is our entry area. But we just added buffer, additional buffer based on yesterday's price action. But if it goes below your stop loss, below this, probably you need to exit. But here you get a question. Do I have enough RR? Is RR is available? Check the RR. You will get 1:3 RR. Even by adding this buffer, entire buffer. Let us check the RR. Enough RR is there or not? So I am adding some entry, stop loss buffer also I am adding. A little below the distal line of the 5 minute zone, a little below distal line I added some buffer. So let us assume that could be your stop loss buffer. And your entry is this blue color area. So exactly at this blue color area, let us assume we are planning our trade. That is our yesterday's low. The low of yesterday. And this is your 15 minutes target. So at our 15 minutes target level, we want to exit. See here you have 1:3 RR is there. Risk reward is 3. That means you have exactly 1:3 RR is available. Okay, little above 1:3 or little below 1:3 is acceptable. But okay, we got 1:3. Maybe if you further reduce this, maybe 1:2.95. Okay, it is close to 1:3. See, we added extra buffer based on yesterday's price action. We also added additional stop loss below the distal line till the entry. Till the target. We got 1:3 RR is achieved. So that way, this is going to be a very good trade for us. If it is experienced people, 1:2.5 is also okay. That is what I explained you. about how experienced people generally consider. 1:2.5 is also acceptable, but for your point of view, 1:3 is also achieved here. So how much, with this approach, how much profit you would have got? This is based on what is your entry? Yesterday's low. Because yesterday's low, we are assuming from there the institutional order flow is started. Till this 5 minutes fine-tuned area. Based on the rejections, yesterday's rejections, this is our understanding. That is what happened today. And the target is 15-minute zone. So let me go to the 15 minutes time frame. So our target is achieved at 13:15 candle, 15 minutes candle. So the open of this candle is 1441.75. Let us calculate the profit. $1441.75 minus what is the entry? Entry is this blue color line. Let us say yesterday's low of yesterday. That is 1423.15. One four two three. Sorry. 1423.15. Actually, this is 1422.60. This is today. Slow. Yesterday is 1423.15. Today's low is it went up to 1422.60. But we are considering the blue color area is our entry. Let us assume we have added that much buffer. With that buffer, we are able to achieve 1:3 RR. So you got 18 rupees 60 paisa profit with this. So what could be our profit? Let us open the Zerodha's margin calculator. So Bharti Airtel 29th August futures. We have 475 is the quantity. The lot size is 475. And the margin is 1,21,563 based on the current price. It could have been 1,21,000 by the time the price has reached to this level. Approximately, it could be 1,21,000 or maybe 21,500 you can say. It doesn't make much difference. But 18.6 into 475, how much profit we would have got? 8,835 rupees profit. So into 100 divided by the margin 1,21,500. Let me say 1,21,500. We got 7.3% ROI. 7.27. That means 7.3% ROI we got. So excellent. So what is the reason for getting such a good profit? Reason number one, it is a high liquidity zone. And this high liquidity zone concept again mixed with the new strategy we developed, a lower time frame zone as an horizon to the higher time frame. Lower time frame is either 15-minute zone or 5-minute zone. And that became an horizon for the creation of this entire 75-minute zone. That means the 75 minutes high liquidity zone picked up the orders from this 15-minute zone or fine-tuned 5-minute zone, and then the zone is created. That too high liquidity zone is created. Then can you imagine how much strong order flow will be there in this area? On the top of that, institutions again, they are adding new orders into this area, a little above this. That's why see how it stopped this entire fall. The prices were moving down. From here it started moving up. And again from here it was started moving down. And finally the stop, it holded that. It holded the fall. And then started moving up and again came down. Once again it gave an entry and again it moved up and reached today's intraday profit. First of all, it is the power of the high liquidity zone, no doubt in that. But on the top of that, the new strategy you learned in lesson 22. A much powerful strategy. And we have developed this strategy. Our NeoStock, we have developed this new strategy. This strategy is not available in the market. The lower time frame zone as an horizon to the higher time frame. Probably by seeing us now again in the coming days, people will start teaching this strategy. But we developed this strategy because our NeoStock software helped us in finding such kind of strategy. It is mainly because of the software development that helped me in identifying such kind of price actions. That is what you learned in lesson number 22. Previously also we have seen this strategy has given good profits to us during the intraday. Even Nifty Bank Nifty traders also used this strategy earlier. And high liquidity zone also previously we got couple of trade opportunities. But today also we got a trade opportunity, but this is not really a trade for the traders. The reason is you are not aware of all these price actions. You might be looking for a trade in this fine-tuned area. Narrowly you might have missed the trade with 80 paisa. After adding the 0.1% buffer, narrowly you might have missed this trade. But experienced people who are having a good understanding about the price action, probably based on yesterday's price action, you might have defined the buffer. Entry buffer not based on the percentage. Entry buffer based on the price action. At the same time, this buffer also made you to achieve 1:3 RR. If 1:3 RR is not there after adding the buffer, then you would have ignored the trade. You got 1:3 RR is achieved by adding this buffer until this 5 minutes distal and a little below. We added the stop buffer also we added. Even after adding stop buffer, still we are able to achieve 1:3 RR. Even if you would not have achieved a little below, you might have adjusted this blue color line, still you would have got 1:3 RR. Even after reducing to another 20 paisa, still you will get 1:3 RR. You will get the trade and also you will get the RR. But anyway, we already achieved 1:3, close to 1:3 achieved from here. And profit and ROI also you got 7.3% ROI you got. That is more important. Our average intraday ROI is 6% for high liquidity zones. Even after adding this buffer, still you got 7.3% RR you got. From yesterday's low till this 15-minute zone, you got a 7.3% RR you got. I mean a 7.3% ROI you got based on one futures margin cost. That is excellent. And your investment is only for futures point of view. Options, maybe your strategies are different. You would have got more profit in options. Your investment also could have been less in options. But futures I have always taken the reference. This is the ideal scenario for the risk management point of view. So 1,21,000 is only your, or 1,21,500 is only your margin cost. So for that, on that investment you got 7.2%, 7.27, that means 7.3% ROI you got. So 8,835 rupees profit you got. So good. But those who are following strictly based on 0.1%, buffer, entry buffer. You might have missed the trade with a difference of additional 80 paisa. But no problem. Those who miss, no problem, because you are in the beginning stage. You are learning all these strategies one by one with the help of these high liquidity zone analysis videos. Now this will be a new learning for you. How price action can also be used for defining the buffers based on the critical zones. See, you can't use these strategies just like that every time. When prices are nearing very close to the zone and moving away, that is an indication that strong institutional order flow is there. Next time again prices will go down, come down and reach this your entry area and again move up. Or if the order flow is very, very strong, the order flow doesn't let you enter into this fine-tuned area. See, that is what happened today. So from our yesterday's low, a little below it will go and then again it will be started moving up. That possibility is there. Or a little above, just before reaching this blue color line, again it will be started moving up. That possibility is also there. It's all depending on how strong the supply on that particular trading session. But definitely the demand is much stronger than the supply, no doubt in that. But today's supply didn't let the price to enter into the fine-tuned area. That's why many of you might have missed this trade. This is the point you have to observe. But those who wants to take higher risk by adding additional buffer, this is one such kind of strategy. See, this is the opportunity given by the NeoStock high liquidity zone. Whether you utilized the opportunity or you did not utilize, that is a different story. But our software high liquidity zones given you an opportunity. Maybe you might have missed this opportunity by adding only 0.1%. Maybe some other person might have utilized this opportunity the way how I explained the strategy, how I defined the entry buffer. Not based on the percentage, but based on our previous day's price action, I defined the buffer. So this is a new learning for many of you people, especially people who are not having experience. Some of you people having experience, probably you are aware of these kind of price actions and how you can manage these price actions. But new members, definitely it will be a good learning for you. So that's why it's a very, very important session. Today's session for those who are learning or gaining experience from these videos. Okay, this is about Bharti Airtel. Hope you understand the importance of this strategy. And the next one is Hindustan Copper. This is a daily high liquidity zone. We have a rally-based rally. Rally-based rally. This is what our software identified, this high liquidity zone. And we fine-tuned with 75 minutes time frame. And in the 75 minutes time frame, we didn't have proper price structure. Why I am saying proper price structure? We have a drop, 1, 2, 3, 4, 5, 6, 7 base candles, and again a rally candle. But once prices came into this zone and then again moved, probably there is a strong order flow. Rejections always gives indication there is a order flow. That's why what I did, looking for an aggressive trades. For that I went to the 15 minutes time frame, and in the 15 minutes time frame, identified a drop base rally. Prices came near to the zone and again moved up. So probably there is a strong order flow, might be here. Next time also prices came not very close to this, but again started moving up. That means some institutional activity is taking place. Not exactly in the fine-tuned area, but an aggressive trade point of view. So 15 minutes onwards, some order flows we can see here in this area. So again in that, again fine-tuned with 5 minutes time frame within the 15 minutes area. sorry, yeah. So here in the 5 minutes area, we can consider this as a ERC candle. Of course, this is looking like base, and also you can consider ERC as a leg-in, 3 base candles and a rally candle. This is a failed ERC as a leg-in, 3 base candles, rally. Because the length of this candle is almost same as or a little higher than this leg-out candle. So that's why I'm considering this as a leg-in. Failed ERC can be used as a leg-in, 3 base candles and rally. So earlier prices moved and coming very close to this 15 minutes area and again started moving up. That means there is a strong order flow in this area. That is an indication. Maybe we can look for an aggressive trade based on the price action flow. Next time also prices came and again started moving. So maybe some institutional order flow they added in this area. But anyway, prices did not reach today. This is the daily zone. So there is no trade from this stock. And the third one is TVS Motor. It is a 75 minutes high liquidity supply zone. Let me move on to the 75 minutes time frame. And how software consider this as a failed ERC candle. Failed ERC candle can be used as a leg candle. So this is a leg in after the 2 base candles and then drop candle. This is yesterday end of the, but today morning see what happened. This entire supply zone is violated with a gap up. But have you noticed I didn't fine tune this zone? The reason is look into the 15 minutes, you will understand. See the structure. Here we have a leg candle, all these are all base candles. So many base candles. That indicates there is no order flow at all, institutional order flow. Such kind of zones will be violated easily. See, with a gap up today, easily the entire zone is violated. Even if you look into 5 minutes time frame, still you see the entire zone. Here you have a leg candle, 5 minutes leg in, and all these are all base candles. And again here ERC candle, this one. And leg out. Between these 2 candles, there is no base candle. So such kind of zones will be violated easily. We have a drop, another ERC candle, again another drop candle. And no institutional activity. There is no institutional activity in this zone. So easily the zone is violated today. You already learned when a zone will be violated in lesson 16. I have explained all possible scenarios when a zone will be violated. So easily the zone is violated. So this is about the high liquidity zones we identified yesterday. Hope you got a good learning from Bharti Airtel chart. And let us all meet again in our next video. Thank you.